Joining us this morning is ICMA-RC Chief Investment Officer Wayne Wicker. Wayne, good to see you. Thanks so much for joining us.
Thanks, Maria.
And I know the firm is based out of Washington. You're close to the action, and you've got to allocate capital with $30 billion in assets under management. Do you expect tax reform, and what kind of an impact is that going to have on money?
Yeah, you know, I think that investors have really pulled forward a lot of gains in anticipation of a quick tax reform bill. I don't think that that's going to be nearly as quick as people think. And I think that as a result of that, it's going to be a little delayed in terms of how that positively impacts markets later on this year.
I guess what I'm getting at, do you think the market sells off on that?
I think that the market over the next month or so will sell off as people recalibrate on the timeline for tax reform.
So where should people focus? I mean, we have financials reporting, and it's kind of been a mixed bag, right, because there was a giant run-up. Should people focus on technology? Should they look at utilities? Should they start looking at individual securities? So if I'm looking in the financial space, maybe I want to go to the exchanges like CBOE or the NASDAQ or something like that, or insurance companies. So where should investors be placing their bets in this type of market?
Yeah, Kevin, I think that investors have already started to shift their focus from that real big focus on financials earlier on when the election had occurred, and they've shifted it to technology over the last month or so. I think that for longer-term investors, which is what we end up focusing on, there's going to be a great opportunity for financials, but it's not going to be in the first half of this year. It's later on in the year, next year, because I think it's going to take a long time for some of these tax reforms and some of the other administrative fiscal policies to take place.
Yesterday I saw a report from Goldman Sachs to its leading clients, and it said we're not expecting tax reform till the fourth quarter. So you're already seeing the major Wall Street firms set expectations, and it's definitely not the summertime.
Right. Yeah. Kevin Brady said to Neil Cavuto yesterday, I think, that we deserve praise if we get it done this year. It's still possible.
This year, wow.
Yeah, right, that if we get it done even in the second half of the year. But it would help if it's retroactive. If the tax rates are good for the entire year, that's a potential positive for the economy. That would be a big boost. And markets anticipate the future, so if it's going to happen in the fourth quarter, like you want to buy the market when? During the summer?
Yeah, we'll see, Dagan. I think the other thing that we aren't thinking about is it takes a while for some of these things to, once they're put into place, for companies to get traction. So you're not going to see a lot of that impact on earnings until 2018 and beyond. And so I think that markets are anticipating that, as you would suggest.
What about the fixed income market? Because we're starting to see the 10-year Treasury come down pretty signitigantly on the yield side. Right. People are talking about the yield curve, right? We've got the dollar index breaking below 100.
Yesterday, Stephanie Pomboy told us that if we don't see tax reform and health care reform this year, the U.S. goes into recession. That's what those yields tell me.
Right, exactly. So are you positioning it more into fixed income now, given the rise in the markets, or how are you managing your clients' assets in that regard?
So I think on the fixed income side, you are seeing a flattening of the yield curve right now. And without any assistance on the fiscal policies, that typically bodes for a slowdown in industrial production, to Maria's point. However, I do think that if you do get any insight into 2018 in terms of fiscal traction, the place that we would think is attractive is getting into tips now. You know, inflation is only priced at below 2% for the next 10 years at the moment. And that is well below what history would suggest inflation.
And where people are getting into gold, they're signaling that inflation should be ticking up. So tips could be a great place for them.
Later on, I think that's right.
All right, great advice from you. Thank you so much for joining us.
Of course.
Good to see you, Wayne. We will keep watching this market, certainly. Wayne Wicker joining us there.